Hey traders, checking in on the stock market today. Opportunity in both directions as we were respecting support and resistance from yesterday's levels, pretty much setting up for quadruple witching tomorrow to dictate whether this is our weekly higher low bounce or whether we have something further to worry about as far as more consolidation. So going to look at a couple individual charts that are standing out, going to look at the broader market and the key sectors that make it up, and going to go over probabilities and how we can use Fibonacci retracements to gauge who's stronger and who's weaker. So here we have SPY, pretty much 2 daily inside bars in a row, which shows us sideways trading, and we are waiting for a break of this sideways range probably tomorrow. And again, we have to keep in mind that there's a dividend distribution in SPY tomorrow, so it's going to artificially open lower to account for that dividend. If you want a chart that does not have the dividend factored in, the S&P 500 futures chart is what you're going to be using tomorrow. Because again, a bunch of people are going to wake up tomorrow, myself included, and look at SPY and say, oh, we're significantly lower. And then remember, it's a dividend distribution and we're opening lower regardless of what the futures chart does. So with SPY, when I'm looking at probabilities of what is the most likely scenario, if I'm playing off support or playing off resistance, I want the price action to be as extended as possible heading to those levels. That increases the probabilities that we are going to bounce off of them. So we had a clear rejection and bounce this morning. So bears had an opportunity and then bulls had an opportunity. For SPY, the high of yesterday was 448.41. And as I said in the video yesterday, if we open lower today, we're scouting an hourly higher low, and the bulls must break the high of today to confirm an hourly trend change and confirm bounce follow through. So first thing this morning, okay, we're opening lower. Prove it, bulls. Break that high of yesterday. We shot up right when the bell rang. This is the bulls making their move. They failed resistance by 14 cents, and then we dump. Why did we dump? Because bears jumped in, top fishing resistance, and bulls bailed on their positions, recognizing the inability to break resistance. As soon as we, how do you know when you reject? Obviously, within the first couple minutes of a pullback, how do you know we're not just going to break over that level? It's the low of the day. We have the low of the day established. We make our move up to that level. If we hit a new low of the day from there, bears win in the short term. So that new low of the day at 446.97 was the trigger for bears to get confident. And again, then we just dropped down $2 very, very quickly, almost $3 drop in less than an hour. So bears had a top fishing play first thing. And I know a lot of people don't like playing. There's not a ton of SPY traders out there. If you're trading weekly options on SPY, or if you're trading large capital common share positions, then it's a worthwhile trade. But again, this is our gauge for the market as a whole. And I can have bullish names that I'm looking at if SPY is bullish, and bearish names that I'm looking at if SPY is bearish. And the rejection from resistance would have me looking at weaker names for a bearish entry. I personally trade SPY plenty, so SPY levels matter to me, aside from just being a gauge of the market overall. From there, okay, we're still looking for an hourly higher low compared to the low of yesterday, even though we rejected. Anything above the low of yesterday is an hourly higher low. So I'm then watching the retracement size. Okay, we're down to a 382 retracement. Bears keep following through. Okay, we're down to 50% retracement. Okay, this is way more pullback than the bulls want to see. At this point, all the bulls are hoping for is a daily inside bar, which means just hold the low of the previous day and get a bounce going. So how can we have confidence to make a play based off of 443.44 support? At that point in time, the 15-minute RSI for SPY was down at 20, and the QQQ 15-minute RSI was in the teens. So again, if I'm playing a bottom fishing playoff support, I want the 5 and 15-minute RSI oversold, and the more oversold they are, the more confident I am that support is going to hold. So there was a bottom fishing play off of that level, and it's the kind of play where I scale in. I'm not just going to try and nail the bottom. Maybe I make one entry at 444.30. Maybe I save another entry on a break of 444, and then my stop goes a bit under 443. And I wouldn't have filled all of my positions, but we would have seen a big time bounce, and an hourly higher low was set. And then we had another bear opportunity where at the end of the day here, we shot up, the 5-minute RSI was approaching 80, and we tested a double top, the high of today and the high of yesterday, and we rejected, and then again, bears get another win. So we respected support and resistance consistently today on SPY. And QQQ, again, 15-minute RSI down at the low. It was down in the teens, little bit of a bounce. And again, I can't look at that and say we're oversold on the 15-minute time frame. We're going to hold the low of yesterday. I can look at it and say, I'm confident that we're going to hold the low of yesterday initially. Maybe it just leads to a 15-minute bear flag and then a bear break, cooling off RSI. But that initial bounce is what allows me to potentially position for lowering my risk or just letting the trade play out and trying to see this hourly higher low form. So QQQ did end up getting a new low of the day with no follow through. And then that resulted in a significant hourly bounce there as well. Little 2-minute resistance and bull break. Hourly time frame, higher low set. So again, just low of yesterday, high of yesterday, higher low. And QQQ did break bull into the end of the day, but we're not going to have a whole bunch of confidence in that unless SPY breaks bull as well. So QQQ, daily bounces underway. We know as bulls, if we're looking for a weekly higher low in these broader markets and in these major sectors, the last thing the bulls want to see is an inability to break the all-time high and a confirmed daily downtrend. So this is now a very key support level for the QQQ bulls to maintain 373.37. If that level breaks, red flag in the short term, because for me, that is a confirmed daily downtrend if that level is lost from here. XLF. Actually, let's keep talking. We'll go through XLF. So XLF, again, the back and forth here where we have green, red, green, red, green, red, and still mostly sideways. So not a whole lot of information with XLF here. Weekly EMA 12 is in play. Weekly uptrend still intact as long as the bulls hold 37.22. And again, watching to see what direction we can break. We did have all of our major sectors down at the low of the day today for very brief periods of time in the morning. And it wasn't significant enough for me to raise the red alarm and make major note of that. Because again, the most likely scenario for me was hourly higher lows compared to the lows of yesterday. And no sector was standing out as a lead bull. We were seeing a lot of correlations in the same direction. You know, XLF's low of the day was hit at 10:45. QQQ's low of the day was hit at 11:15. And XLV's low of the day was hit at 10:45. So most of our major sectors dropped in unison in the first hour 15 minutes, and then bounced in unison from there. And again, we're used to seeing rotation where one sector's strong, one sector's weak, and they're doing this. So whenever they're both going in the same direction, that's when the movements for the broader market as a whole are more unified and essentially get a bit more follow through. I am a lot more comfortable trading SPY itself when all of our sectors are doing the same thing. SPY gets choppier for me and less clear when QQQ's up and XLV or XLF are down and they're inverse to each other. So they've only been in this inverse rotational relationship significantly, really since the COVID dump. It's been a lot of that action. I can remember pre-COVID where I was just trading SPY and it was getting, everything was correlated to each other in both directions. So that has been a major shift since then. But today, an example where everybody's going in the same directions in the morning and then into the afternoon. XLV is a potential daily bear flag at this point. Simple statement, if we do not break 133.83, then it's a bear flag. So the bulls have to get over that level, and we are on the verge of a bear cross of these EMAs for the first time since the COVID lows. No, that's not COVID low. Since the March pullback. So first time in 6 months, we're potentially seeing a bear cross here. Let's see if the bulls can fend that off. This is the weakest of the major sectors right now. And the weekly, still holding EMA 12. So the bulls can save it, but have to fend off this bear flag. Can't let that confirm because then we're at risk of losing weekly EMA 12 support. IWM, daily bounce underway with the inside bar bull break, but the bulls have a lot of work to do. Again, we're scouting weekly higher lows, but we need to see a big enough bounce for the bulls to create the space for a daily trend change to eventually try and take place. And right now on this current bounce, we're just scouting a daily lower high to be the result of this bounce. But with that IWM bounce, USMJ getting some follow through, MSOS, the ETF, Solid second bounce in a row. You can see these 2 days are the more significant 2 bounce days in a row. Again, look at volume. This bounce had 0 volume. It's the more significant bounce that we've seen in a while. This back here was similar. So let's see if we create the space. The most aggressive bulls are already in. More patient bulls are waiting for this bounce to top out, and they're scouting daily higher lows and playing off of those lows. So still keeping an eye on the MJ sector. Canadian MJ, notably weaker still. And this is new. Newer, I should say. We don't see this happen, have not been seeing this happen nearly as often. So it is standing out to me that US is stronger, and there is, the potential that the SAFE Act gets added onto a different bill, but that still needs to be voted on in the House, and then it's got to go to the Senate. It's really nothing in the short term as far as a catalyst. But again, keeping an eye on the sector. And it's been a very impressive bounce. It looks like, yeah, so what, 2-day bounce, but look at the percentage move off the low. It's 8% in 2 days. Let's see if the bulls can change the daily trend. Other than that, we got the dollar. So the dollar had a bullish reaction to the jobs numbers this morning. And we had this tightening range and it broke bull. So no weekly lower high is being set yet. We would have had to have seen a bear break of this range for that to be the case. And with this dollar bull move, and again, in the reaction to the jobs numbers, metals dumped. Big dump. I have not been in metals since I exited on this oversold bounce. And I'm in no rush to get back in them. We are scouting a weekly higher low, but now it's a pretty notable pullback. So it is still a potential inverse head and shoulders, but this is a lot harder for the bulls to overcome than it would have been if we had held that previous low. So I'm still in patient wait and see mode. And the most powerful thing about being patient is not caring if you miss the move. Because that's the only reason I'm not in a metals trade right now. If I was worried about missing a breakout and missing, a shift in momentum, I would have entered a position and I'd be back in the red right now. So really, it's just not caring about missing the move. And it helps that the metals themselves generally aren't extremely volatile. And, a big move is 5% plus on gold. Meanwhile, a big move in crypto is way more than that. So there's many reasons to remain patient, but patience is a good thing. So we're scouting a weekly higher low. There's no sign of it. 4 hour is oversold. We'll scout a 4 hour lower high next time we bounce. And it's back to square one for the bulls. We need a 4 hour trend change. We need a daily trend change if we're going to set a weekly higher low. Uranium plays, CCJ, one of them, is tightening up. We've got a nice clear range here with our high, low of daily consolidation, lower high, and we're watching this 2365 level to see if we can continue tightening up in a little mini equilibrium into next week. If it bear breaks 2365, it's a little confirmed daily downtrend, but we'll still be looking to week or daily EMA 12 support. We'll be watching for first hourly oversold conditions, which have not occurred yet. And I may be interested in an hourly oversold bounce play here. But one other thing that we can use information from this chart, if we bear break here on this trade, UUU is another ticker here, and it's not consolidating. And it's been running hard. It's a smaller cap name. His dollar volume is less significant, but it's looking like it's due for consolidation as well. So if CCJ keeps giving us signs that it's going to keep consolidating on the daily and lose support, then maybe we look at this to be a laggard pullback play and look for some potential shorts on UUUU to be looking for that daily consolidation. And again, it's another name that has a ton of space for a daily higher low to form. The question that we have on uranium is, are we going to cool off from this wave of hype that we've seen the last 3 weeks? CCJ is already cooling off a little bit. Again, still very healthy overall, but UUUUU has not yet. DKNG daily inside bar on watch tomorrow. Again, looking for a daily higher low to be established. Netflix was very similar. It broke its inside bar bullish. Now, patient bears on Netflix are scouting a daily lower high compared to 615.60 to be a result of this bounce. Bulls are obviously hoping to maintain an hourly uptrend and make it back towards the all-time high. But DKNG has not broken bullish yet, so keeping an eye on this inside bar. If it breaks bull, our daily higher low will be set at 58.54, and then we're watching for the potential of a lower high compared to 64.58, knowing that if the bears are going to prove anything to us, they have to confirm daily downtrends for more significant weekly consolidation to be underway. So again, if you're looking at bulls, you're looking at SPY setting a weekly higher low here. And if you're looking for bears, you're looking for daily lower highs to be the result of these current bounces. And both names, or both directions I should say, have very clear stops to be playing off of. Bulls of SPY or QQQ, the lows must hold. And if I'm looking short as a patient bear, let's say I'm looking short on Netflix, I have 615.60 resistance to be playing off of. Obviously, if we hit a new all-time high, then my bear thesis is out the window. But it's a significant distance away. We could go another 4% and still just be looking for a daily lower high. So there are setups for both directions. You just need to determine which direction are you looking at, and do you want to be aggressive or conservative. One more trade here, or one more play, hood. So again, probabilities when the most likely longer term scenario aligns with a shorter term setup. So the weekly time frame here as the all-time low, the all-time high. We knew that was going to be the high for a while and put out a video talking about that. And again, recent IPO runners and how they trade. If you want to search hood chart guys, it'll probably come up on Google. But just talking about how a temporary top was incoming, and don't be a bag holder. But this is a bit of a falling wedge. So we know a falling wedge is a bullish pattern. We know a weekly high or low compared to the all-time high is the more likely scenario. Let's actually draw this on the 4-hour time frame. And so we still need the bulls to show up with volume and prove it to us that we're breaking here. But I would say we've already broken bull from this falling wedge pattern, and now we just need a bit of follow through. So I'm looking at daily lower high resistance of 42.54, and we are testing that right now. If we were to reject, we would scout a potential inverse head and shoulders here, and we need a spike in bull volume to show us, yes, the break is taking place. So it's setting up and it's trying to break. And for a name like hood, you want to be watching IWM, in my opinion, as the best correlation as your guide as far as growth names. But just something to keep an eye on as the hood bulls. Again, it's just the scales. When you start to see bear breaks that lack follow through, it's the scales of supply outweighing demand, and then the scales are just slowly evening out. And then you look for a falling wedge to do this when demand exceeds supply, and that's what the hood bulls are hoping for from here. So one more note on probabilities and fibs. We talk about fibs a lot. Determining probabilities, is it going to be a flag or is it going to be an equilibrium? And again, look up the fib video on our YouTube if you haven't watched it yet, but it goes in depth into that scenario. But you can also use it to compare individual names. So what do I mean by that? All morning today, I was looking and saying, okay, if SPY is going to hold the low of yesterday and bounce from these 15-minute oversold conditions, who is positioned better for the bulls to benefit from the broader market going up? And again, it benefits from bots and algos buying based on what SPY is doing. It benefits for sentiment for the entire market and for traders to act on it. So we know if SPY is going up, that names generally benefit the bulls. So from there, okay, SPY, I'm looking at the low of the day. I know what I'm watching there. So who's standing out stronger? Who's standing out weaker? I can look at a name like Apple, and at the low of the day, as SPY is trying to hold its low of yesterday, I can look at this and say, okay, retracement. How much have we pulled back from that bounce yesterday? And the answer is about 70%. That's more than the bulls want to see. That favors an equilibrium. That favors that the next time we bounce on the hourly, an hourly lower high is then going to form. So I can look at all the big major names and see who is standing out as stronger. Amazon was standing out as stronger. Why? Look at the retracement. The retracement to the low of today was more like a 45% pullback. And that's our gray zone, which still can favor continuation. So into the end of the day, Amazon broke its high of yesterday. Apple did not. Amazon showed us it was stronger because it pulled back less. Tesla was another name where we could say, if SPY holds the low of yesterday, Tesla is positioned better than most names to benefit. Tesla's retracement of the bounce was 50%, and then we hit a new high of the day, breaking the high of yesterday into the close. We can do it in the other direction as well. Who's weaker? You know, if I'm looking at a drop and an hourly bounce underway, The names that retrace less of their bounce are weaker than the names that retrace more of their bounce. So the fib retracement tool is great for determining probabilities of flags and equilibriums, but it's also great at comparing individual names. We've been doing it in the cryptocurrency space on the monthly time frame for a significant amount of time. I'm now rambling and need to wrap this up, but monthly time frame on Bitcoin retracement has been about 64% or so. And again, just all the different altcoins have all retraced different levels. So 66% retracement. Ethereum is a more significant retracement. And then someone like Litecoin is a less significant retracement. So again, when I'm looking at all these coins, who's stronger, who's weaker, retracements are helping me answer that question. I hope you had a great day. I hope you have a great weekend. Do some good things, and we will see you soon.